Good morning, folks. Happy non-farm payroll day. Okay, we will be on the sidelines, but some of the things I'd like to have you study and observe today. In about an hour from now, the non-farm payroll numbers are going to come out and cause all kinds of chaos in the marketplace. And the level we're looking for the dollar index. If you look at the last two down candles closes on the daily chart, it's this candle here and this candle here. You blend both of those bodies together and you get the mean threshold here. So we'll probably see it want to trade down to that level. Could pierce it a little bit. It could pierce it and trade down through it a little bit. But we are expecting a potential run above these equal highs up here to attack the buy side liquidity. There's a heavy net long position on the dollar index. So there's going to be most likely a strong willingness to send the market up there so that way they can book some more profits from the long positions they've assumed at every down candle here that's been buying. So there's not going to be any argument here that it's obvious that this is an equal high. Buy stops resting above that in the form of short selling because they've engineered short-term resistance. So therefore, on a short-term basis, we're probably seeing a lot of retail minds see this as a topping formation. So buy stops are going to be building a liquidity pool for buy side liquidity here. So that's been our short-term objective anyway, the bodies of these candles, but we'll probably see that run up there as a result of the non-farm payroll. If the opposite occurs and we trade lower, we'll be looking for the market to trade down to the mean threshold of this order block here. Okay, sell side liquidity rests below the bodies of these candles in here, as noted in the blue shaded area. Euro dollar may see a drop down into these two down closed candles on the 4-hour basis. We have equal highs in here as well, so most likely the scenario will be this. We'll probably drop down into the order block. Could be the mean threshold between the bodies of the candles blended together. But ultimately, I think we'll probably see some support at this level, and then we'll probably gun above 106.30, maybe even run even as high as 106.70 up into this section of price action. It's obviously shown some willingness to want to go higher. Euro pound is going ballistic. It's still reaching up in those higher levels on its daily chart. So we may see that short-term run on the dollar to clear out the equal highs, and then that will propel price on euro down to this level here and then surge it up to here. And that looks like this, where price would go up to these levels in here and maybe reject and trade back into a trading range. That would give euro dollar the ability to rally and make a move above 106.30. If we lose these two down closed candles on the 4-hour, we'll be returning back down into this short-term low for the determination of whether there's going to be new buying or if this was just a small little bounce right before we take out the sell side liquidity below the marketplace. Pound, I believe we're probably going to see the expansion this morning to trade down into our sell side liquidity fair value gap. If we see a rally, it should be capped probably by the close on March 3rd's candle on a 4-hour basis, about 122.25 to 122.20. That could be the level it reaches for if it's going to bounce and trade higher on a weak dollar. Dollar CAD, we're holding consolidation inside of our fair value gap from a daily chart. I think we'll probably see one more pop up. And if we lose this short-term low here, we're going to want to come all the way back down into this candle's opening around 134.15, 134.20. That's the downside support. But I think we're going to see one more drive higher this morning on non-farm payroll. Aussie dollar, watch this short-term low here. We may trade up into that on the result of NFP. And then we'll probably most likely get some kind of a rollover going into next week, making an attack on this small little liquidity void. And that's our objective for next week for Aussie. Euro pound, like I said, it's been going up straight. Let me just show you real quick a daily. And you can see there's our fair value gap up here, and we also have this gap that we mentioned, this low to this high. We're already in that, so it's really reaching for that. So it bodes well for bullishness on euro and weakness on cable. Dollar yen has reached up into the middle or mean threshold of our area that we've identified as a liquidity pool. Buy side liquidity is being absorbed in here. I think we'll probably see one more drive through. Look to challenge the high formed on January 19th. Dollar Swiss, we're sidelined. We're not watching this pair. Gold, this again, we're watching for new information. And silver, just 1 point away from the 1680 level I mentioned, which is probably going to be the downside objective for this week. Nothing again here. If you see a little bit of a bounce, we have a fair value gap in here. One candle producing downside price delivery. And we may see it run up in here, and we might find some resistance up here on this short-term low if we get any kind of a pop. But ultimately, we're not seeing any kind of a return to bullishness yet. So it may chop sideways for a little while or continue lower after hitting this short-term low as resistance. And that's it, folks. I'll see you later on this afternoon with a weekly recap. And until then, I wish you good luck and good trading. Stay on the sidelines. Non-farm payroll is NFP, not for professionals.